Good morning. Welcome to Trading Owl. I'm sure most of you have heard this phrase sell in May and go away. But do you know why it is said so? Is it really needed to sell? Is it really needed to go away? Let's review. Let's start with the data from 2004, May 2004. May 2004 saw two drastic drawdowns in the market. There were two major lower circuits that were hit. People lost tons of money. That was the time when BJP lost elections and UPA came into power. The Manmohan Singh government, UPA won. Do you know that it was not only the Indian markets that had fallen that day or during that time? It was the global markets which had fallen. Globally, a lot of economies saw, a 10% or a lower circuit that day. Do you think they were impacted because of the election results in India? No. There was a phase where the market had moved up substantially. The market was going sideways. There was a dip, or rather, let's say, a profit booking that was needed, and it just coincidentally happened the same day. And yeah, we look at it as a change of power and what led to the fall. But the point is that was the time when market bottomed out, and from there was no looking back. Market rallied. Market rallied a lot. Stocks double, triple from there. So going away from May is not the idea. May can give you a lot of opportunities if you are watchful, if you're sitting on cash, if you have your positions well placed. So please watch out for good bottoming out in May. This is just one example. Let's look at subsequent years. 2005, May bottoms out after a good correction and the rally is never ending. Though there was no major event which led to this fall, but the momentum in May was drastic. Coming to 2006, this was the time which is like very similar to our current scenario where the inflation globally was at its peak. Interest rates were rising everywhere. Fed again started announcing, and they had almost about 30 or 40 consecutive rate hikes, or maybe less, I'm not sure. But the point is the market had crashed. The market had crashed almost 31% during the month of May. It bottomed out in June and it rallied. So May gives you a lot of volatility. May gives you a lot of opportunities to enter stocks if you have missed out. So be watchful in May. Coming to further years in May, let's go to the year 2009. Yeah, 2009 was when the re-elections happened and UPA 2 won, and we saw an upper circuit. We saw on the 18th of May that the Indian market had gone up 10%. May was the month where the scenario changed. The entire uncertainty of the change in power ended, and there was a lot of clarity in the market. After 2 years of downside, post 2006 7 8 fall, this was the candle which changed the fortune of a lot of stocks in the Indian market. There was no looking back. Market went up phenomenally from there. So selling in May and going away is not the idea. It is an events that happen in May that we need to look out for and build up our portfolios at that time. So these are just three such examples. You can spend some time and look at the movement of the market in the month of May in the subsequent years. And we are in May, so let's see what lies ahead for us. But all we need to know is we have to be prepared to act based on what the market is indicating. Thank you.